Welcome back to the channel. Uh, if you are copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a very famous, very popular stock called Amazon.com, ticker AMZN. And probably don't need to explain what these guys do, fairly well company, but there are some reasons why I think now is a good time to start looking at this company. So first of all, we have seen during this year a lot of concentration going into mega cap stocks, the Magnificent Seven. And if we look at the performance of Amazon versus those other players, we will see that in terms of valuation, this is not a company that has benefited that much versus its peers. So we have here Amazon trading at 38 times. See how that compares to Tesla, Facebook, Google, and we got Nvidia as well. And you quickly get a picture that when you look at the performance of this company versus some of the other companies out there, this is a clear outperformer, but you don't see this bumps in valuation that you see, for example, in Tesla or in Nvidia. At the same time, Amazon is poised to benefit from the AI rally, but it hasn't benefited from that yet. And I think part of the reason for that is because we will be seeing uh, the realization of those advances in technology a little bit further down the line as they build the infrastructure that is necessary for them to improve their services. So we could be seeing a rally like this that we see this year in NVIDIA coming a little bit down the line, say as we approach the end of the year coming from Amazon. But what we could also be seeing is the belated inflows that benefited these companies coming to Amazon because there was a bit of a imbalance benefiting those, but not all of the Magnificent Seven benefited, and this is one of them. Now, we have to bear in mind that whilst this is a Magnificent Seven, there are other companies that we should be looking into to compare a company like this. So let's finish with the Magnificent Seven. We're missing Microsoft. Okay, so Amazon is trading above Microsoft. And then we got Apple as well. So you see that Amazon is trading above Microsoft, Apple, Facebook, and Google. And that signals to us that the market is valuing Amazon at a better quality than the rest of its competitors. But unlike the rest, like I said, you see a downtrend line over the last 12 months with a flat line since April this year, as opposed to this big rally. Okay. Now we have to also look at the competitors that they have on the retail space because there's different businesses here going on. So we gotta look at Walmart. So again, we got that multiple above. We gotta look as well at Alibaba in China, similar business model. Of course, we get a very different kind of multiple being paid. So you get a picture. In terms of valuation, it is signaling to us that the market likes Amazon. However, Amazon has been proving itself for quite some time. So let's look first of all at how this comparison in terms of valuation stacks up versus its own historical valuation. So you see that the stock, as of now, has the lowest multiple that you can see in a very long time. So if we go really back in time, we are now sitting at a similar valuation to 2008, 2009, 2010. And not only this is a period where the company was much more fragile, it was still a relatively new company, but also we were going through a period of massive turbulence here, particularly during 2008. And we're really not far off those lows in 2008. So I think this presents an opportunity because of the reasons. One, stock is trading at a good discount, albeit premium to competitors. And two, I think that there's headroom for inflows that are sitting or are going to be shifted around, are going to be reallocated, sitting on the sidelines as many investors pull out of other mega caps. So the last quarter was pretty positive on all fronts, and truly there were very interesting commentaries coming from management in terms of acceleration of sales in North America. I also like the efforts that they are introducing in terms of automation of their operations that will help bolster the bottom line and make the business more efficient. But also the financial position is rather strong. So we can see here how, despite being such a massive company, the top line on a quarterly basis is still growing at double digits and accelerating from the couple of years prior. Gross profit also expanding and still very good level considering the nature and size of this business. EBITDA as well, net income. So you do see improving financial KPIs across the board. But this is also very important. Cash and equivalents are increasing. These guys have, as of the end of last quarter, $85 billion in cash that they can go out and use to invest in opportunities. And that's one of the great things at their disposal. They have many different avenues that they can explore. At the same time, we do see how the debt is being reduced over the last few quarters. But something that is key, in my view, is that they have announced plans to pay down over $25 billion in debt throughout this year. And that, if you think about it, is quite significant. Let's see, so 25, so that's about 15% of their total debt, which obviously once it's liquidated, will help drive forward the cash flow from the business, which again, we already see increasing over the last few quarters here. So all these things combined with animal spirits, which I do see coming back at the end of the year, potentially after announcements from the Fed on rate cuts and so on, make me believe that it is likely that we will see the price coming back to the 200 and above level. That's a price that we touched on briefly throughout the month of July, and then the stock fell down to about 180. So all we really need to capitalize here, because of the price of the options, is a 10% move back to this level. and that would provide us with a 300% return. So in terms of the options, first of all, I find quite interesting that considering the nature of this company, um, they are offering an implied volatility of between 30 and 40%. Not unusual, but it's great for us as traders if we want to play out that volatility and get those outsized returns. Now, the earnings are coming on the 1st of August, and I think again that we will be coming back to this 200 level and potentially further. So with the prices at present, I can buy the 200s at 648 in October and sell the 200s for just over $5 in September on a one-to-one ratio. And what that does is that provides me until the end of September to get that 300% return at around 200. That would be one way to play it. And the reason why I'm doing that on a one-to-one ratio, unlike a 2-for-1 ratio, is because the technicals at present don't seem yet ripe to enter. However, I do think that the business will be performing well. So I think it is likely that we will see the stock falling down a little bit more, potentially around the level of this SMA, and that will provide us with an opportunity to add another long leg for the same strike at a slightly different price that will reduce my overall spend and provide me with a ratio calendar spread. And that, of course, assuming that we reach the price that we're looking at, the strike that we're looking at, will provide an even greater return profile. So that's it for today. Hope you enjoyed that and see you soon.